Oh, it's Sosa. Can you hear me?
Yeah, I can hear you.
All right, great, great. All right, cool. Thank you, thank you, thank you. I appreciate that. So we're taking a look at EuroCAD. We caught a sale from this area. We're already in profit. So I noticed we had a lot of consolidation right here in this area. And there's a concept that we use when trading. It's called stop hunting. Now, what this is let me show you, let me draw it for you before I show it on the charts. What this is you'll see consolidating price. And you'll have retail traders placing stop losses either above resistance or below support. What the market will do is reach to grab the money in those areas. Yes, sir. It'll grab the money in those areas before it makes its intended move. Now, on a higher time frame, it looks like EuroCAD. Let's go out to the daily. Yeah, so on a higher time frame, it looks like EuroCAD wants to break above these highs here to hit this weekly area. It's been a lot of pushes up towards this level, but it rejects at the same point. So at this point, we want to see if price will give us a slight pullback or how far it'll pull back before that continuation of this uptrend. Now right here on the, what time frame is this?
Daily. It looks like a daily.
Hold on a second. All right, cool. Yeah, so right here on the daily time frame, this pattern that we see, this is an inverse head and shoulders. Let me draw it again and then I'll show it to you on the line chart. So you got this drop and this move here. So that's the inverse head and shoulders. Right here on the line chart, you can see it a little more clearly. But normally when those patterns are formed in the market, before you see the move or the impulsive move to in that up direction, it'll normally retest areas like this. So we can see a retest of this level on the daily or a retest of the lows. Now, just to see where those areas align with the fib, I take my fib, I'm going to connect it from the low to this high in price. So now I see that right shoulder of that inverse head and shoulders that we were discussing, it falls right on the 50 fib. And that head that we were talking about, it falls right on the 786, showing that it's possible for both of those areas to be retested. Now the other thing that makes those areas seem so much more important is all of the liquidity or the money that you have due to the different rejections that you see under these support levels. So every place that you find a support level like this with multiple rejections on the daily, you have a lot of traders placing stop losses right there to protect their positions. So we want to use market manipulation not as the only means of trading, but we use it to give us an idea of where price could go. And then we use technical analysis to figure out or find patterns to support whatever bias we want to look for. Right now, like I said, it's to the downside. So we're actually looking for another entry on this thing, but this move right here may be the impulse for today. Let's go back to that time frame. On this 2-hour time frame, this sharp pullback right here shows me that there's a chance that we could see just a continuation pattern. So we don't want to rush right here. We actually got an hour and 19 minutes left before that candle closes. So the thing that I always suggest in situations like this is to remove yourself from this position emotionally by using your alerts. Place an alert above price and place an alert below price right here at this area, because at the moment this is a significant area right here. This is your key level of support.
What number is that key level? Like your number is a little fuzzy number, right? That key level of support, what number is it in the chart? Is it 1.4?
The bottom is 1.48800. The top one is 1.49 with 3 zeros. So if you look on your 2 hour, it's pretty much just right at those lows. Yeah. So all of this right here, this is the key level that we're talking about right now. All right. So what we want to see, or what we're looking for really, is a close. We're looking for a close beneath this area, and then another bull candle that closes beneath this. Then another bear candle that closes beneath this candle.
So that's a buy to sell zone.
That's what that would be. Okay. Doc Sean, what's going on? How you doing? Yeah, so that's what we'll be. That's what that will be. So when you get to the lows, the way to protect yourself, hold on a second. The way to protect yourself is to make sure that you do not rush. The break and retest method is the best tool that you can use when it comes to structural levels like this in the market. Okay? So if you miss that early entry here and it's down at the lows, this is where most people would get frantic with the emotional part of trading. Like, oh, I missed out on a trade. You're dealing with the FOMO, fear of missing out. Oh, let me rush into it. And you put yourself in a position where you enter a trade during consolidation, like this area right here. Or you'll get a deeper pullback to maybe here, and now your risk reward is terrible, or your stop loss was too close and you end up losing the trade. So that's why after we get those impulsive moves versus rushing back into the market, we just choose to use those alerts and wait. Uh-oh. Did you say anything, Sosa?
No.
Okay. All right. So another one that we took a look at was this Euro AUD. Same thing, we have a macro level of resistance up here at the highs. We took a short sell from here. What time frame is that? 4 hour? Excuse me. So right here, price is still bullish because it's above our 50 EMA, even though we have this slight break here. This move was a huge double bottom, but this area would have been the neckline. Since price did not break above and close above that double bottom, it wasn't confirmed. So what I'm testing now is to see if this will be a valid area of resistance that will push price below this area. And this is another huge key about trading on those higher time frames, because let me go down to the smaller time frame to show you what's going on in here and show you how even if you are well or sound in your technical analysis, it gave you multiple signals that would have confused you. So right here you got a micro break of structure. Normally after price creates consolidation, breaks and pulls back to retest that area, you'll see a break in the lows. right? That didn't happen. What happened instead was it pulled down to give you a double bottom. Now, after getting that double bottom at this structural level right here, that's a major structural level, most traders are looking for a break of the highs. That did not happen. It rejected again to retest the double bottom and create another one. Now, all of this is, what time frame is this? This is the 1 hour. All of this is going on, and I'm pretty sure a lot of traders just lost trying to get in and out of the trades going in the different directions. But just watching it on the 4 hour time frame, you can clearly see that nothing is going on, and there was really no reason to rush to either side. We have consolidation, a macro area of consolidation, and the best thing to do in this point is to stay the hell out of the way. All right, so even right here, we're going to take the same approach. With this consolidation forming right here, we now know that we have money above that area and we have it below here. So let's set those alerts again. Uh-oh. Range. All right, cool. We trap price. Move those alerts. Oh, we just got a sell signal. So that's one thing that I can share. I use on the higher time frames the 9 crossing the 12 as another confirmation for a sale. The higher the time frame, the better. On the smaller time frames, it's going to trigger a lot. I wouldn't recommend it there.
And then higher time frame, which one are you talking about? Like starting at a 1 day higher time frame?
1 hour on down. Yeah, so the 1 hour, the 2 hour, to the monthly. So, matter of fact, while I'm here, let me show you. So this right here was a sell signal on the 1 hour. You got a couple, that looks like 100 pips. Yeah, you got almost 100 pips. This was a buy. Well, really, all of these actually went in profit for a short period. That buy went in profit. This buy went in profit. Yeah, so they all kind of played out. But I definitely wouldn't use them on the smaller time frame. It's just too much movement. So let's see. Now let me clear that up. I wouldn't use them on a smaller time frame unless I'm in a major structural level. Like I may be on the 15-minute, but I know I'm inside of a daily zone or a 4 hour zone. Does that make sense?
Okay.
Right. Cool. Yeah, so down here, you see all of these triggers? You get a lot of triggers. That's too much. Too much.
What does it say in red and green at the bottom?
Cross, it's letting you know every time there's a cross.
Okay, and the red, what does it say? Cross as well, but cross
Yes.
bearish and then cross bullish?
That's exactly what that is.
Oh, got it. Okay.
Yeah, but I only use this indicator. I'm going to say this again. I only use this indicator to align with my strategy. I'm looking for major structural levels in the market first. Indicators are not a means or a signal for a trade for me at all. It's just something that I use for extra confirmation at those areas. Okay. Yeah, so let's bring this thing up here. So last week, our gold sale did well. At this area at the top, with all of my trade setups, you guys will see me figure out what could happen if price moves to the downside. You also see me figure out the possibilities of what could happen if it goes up. I do this to keep me flexible while trading. One thing that I learned is by having a strong bias when I first started, I would put myself in bad positions like losing the same trade over again. So let me give you an example. Like right here, if I thought it was a buy, just because I did my technicals and I saw some confirmations, after it hit my stop loss, I was so blind to what I thought I saw, I wasn't paying attention to the opportunities that was right in front of me. So while it's going down, it may have clearly created a double top. And instead of me closing my position and being calm, now I'm upset, I lost money, and I'm revenge trading. You're going to give me my shit back, right? So I get in sales. I get in another buy as soon as I see any form of pullback. Go in profit shortly, and I'm in the negative again. And honestly, when I first started, I may have lost that same trade 2 or 3 times. And that's when I pulled away from the market to see, like, what is wrong with me. I'd start logging all of my trades, and I saw that if I follow all of my trade setups, I was a profitable trader. Seeing that the inability to control my emotions when I had a perceived loss made me inconsistent, and it made me poor as far as my management with my money as trading. So that's why I always stress mindset over money, okay? Take your time. This stuff is always going to be here. I can give you the best trade that I can find, but if you are not in control of yourself, you are going to find a way to fuck it up. All right. So this sale ended up playing out. It did well. Now, let's go to, excuse me, this 4 hour. On the 4 hour, look what it did. It created a double top right here. Let me show you that on the line chart just in case your eyes haven't adjusted yet. That's our double top. Price does not show the wicks, but it dropped to retest that double bottom. So let's go back to the candlestick chart. So you see that? There's a clean drop from here to retest this. Now, this is the 4 hour time frame. So these wicks that you see, they are a lot of candles on a different time frame, fractals. So within one, within one 4 hour candle or a daily candle, you'll have a lot of other candlesticks. So in seeing that on the 4 hour, I know I can just place an arrow above because now I want to see where the liquidity is. It'll always be above consolidation or below it. So with those multiple rejections right there, we know we have money above, and we also have that double top. So it looks like price wants to break above and capture the money right there before making that move. Now, this is the thing. Simple trading. In order for price to move up, it has to create higher highs and higher lows consistently. Even if the moves are a little choppy like this, right? It's still making higher highs and higher lows, okay? Once we get to retest this area here, as long as price does not break above that high, this downtrend is still valid. So we just have to wait and be patient and see. And this is another moment while we're talking about mindset, where your mindset plays a big part. Oh, the camera started zooming in on its own. Stop AI tracking. That was pretty cool, but wait until you follow. Look, wait until you get instructions. But right here, knowing simple fundamentals about trading. You should not get upset or get flustered emotionally if price pulls back towards your entry. It's a double top. Price is attracted to it. We got a area right here letting us know we have money right here. There's liquidity in this area. So versus getting upset, just trust the processes of trading and allow it to work out the way it's supposed to work out. Let's see. So we'll set that alert there. We'll also set one right here. EuroCAD. Yep. So now let's just pretty much chart these, monitor them. What's up, beautiful? How you doing? Ooh, US 30. This is my favorite. Okay. So we got a daily zone on US 30 that I had marked a while back. I thought this move would be a lot smoother, but it's not. Okay. So right here at this high, price pulled back and created a double top on the 4-hour. We need to see how this next candle closes. Oh, that's not the 4-hour. My apologies. Yeah, we need to see how that closes. Looks like we may have another bear flag being formed.
Why is the US 30 your favorite?
Say that again.
Why is the US 30 your favorite?
Why is it my favorite? Because of the money. It pays so fast. You can put a 0.1 on US 30, get 20 pips, and be up $200 like in seconds. Yeah, US 30 pays out. So the indices US 30, yeah, and gold. Well, really oil too. So oil, gold, US 30, all of those have really nice payouts. You just have to be comfortable. Some people say they don't like them, they move too fast. Nothing is different as far as the movement or the setups as far as price. The things that you would use to confirm or find your trade setups. Nothing is different. The only difference is the amount of money that's on the line, and that's what makes traders get a little antsy about it. But as long as you follow the same concepts with our risk reward, you're fine. And they also have minis on the broker that we use, so you can still trade US 30 without putting up the entire risk on it. Oh, I'm sorry. We got some people over here on TikTok asking questions. I didn't see it at all. Okay. Calls. Oh no, sir. We were looking for sales. You got an hour left and that candle close on US 30. Definitely look like a bear flag. Let's see what happens at this low. Let's see. Looks like the momentum should be on the bear side as well. Yeah. So all the momentum is to the downside. There should be enough to break beneath that slow. Let's test it. Now, since we missed the entry at the retest of the 50, we would definitely need to be patient. Now, one thing that I've been noticing, which is really important, is the times that these moves happen. These impulsive moves, it's normally, I'm gonna show you. So right here when the market opened, New York, around 10, 11, around 11 is normally where you get your reversals. So if you look right here, 11 o'clock, that's when that reversal happened. You'll see that pre-market push and then a reversal around 11. You'll normally also see a nice move around 7. This is in 2. This is 2 o'clock. Let me find one for 7. So right before the market closes at 2 o'clock, you'll normally see a big move. Here's one right here. Let me find 7 o'clock. Here we go. Right? So those are the different times that I've noticed from out the years of trading. So we're looking for these big moves, but you are trading at the wrong time. You may be trading where there's only consolidation, right? And then you'll get some move to grab liquidity. You think you have the wrong direction. This thing drops at 7, boom, quick retest, and it drops in your favor. But at this point, you're destroyed mentally because you lost a trade twice, not from being wrong, just from being too early. So keep in mind those times. What was it? 11 o'clock, 7 o'clock, 2 o'clock. Also that London session, 3 o'clock a.m. That's cool. So right here, again, everything is already took off. What we need to do is just set these alerts and be patient. Right here is where we have that break. We could see a retest. So we'll set an alert. So I appreciate the sessions where we get on and it's more so just cleaning up the charts, because this is really what people need to see. Every day is not a trading day. And even if you have a winning trade like we do here, it doesn't mean that you'll just automatically get others. You have to be composed enough to only take what's available versus trying to force things out of the market. All right. So this will be it for today. It's so let me let everybody else off. I'm gonna mute the mic on your end right quick. I appreciate you guys for jumping on with us. Anybody that want to begin with us, you want to start, you don't know where to begin, you can head to our website, ProfitTakersEU.com. I'm going to show you how to set up your demo account, how to set up your live account, teach you how to trade, giving you a proper trading plan. So when you see me online, you'll be able to go live and trade with me. Okay? That website is, where is it? ProfitTakersEU.com. Now, not only will we give you access to that, but we give you access to the free trial of our biggest gem, which is our Mindset Series, Structure Breaking. Here we talk about what really matters, the power of your thoughts, beliefs, and actions. These are the things that's affecting your trading plan. We also give you access to our 6-week journal to show you how to become more intentional with your words. You have to speak the reality that you desire into existence. We also have a few books available on Amazon, Trading with Consistent Results, and we have log books to help you log your trades and your emotional state in the process of trading. If you do not log your trades, if you can't see where you're making a mistake, there's no way that you can fix it, okay? Next, we have our merch, so you guys support the vision, support the dream. And to upgrade past that free package, we have our beginner bundle as well as our tier 2 memberships. So you guys be great, be safe. Remember, you're only one trade away from living. Why fight to stay the same?